Okay, welcome to our third edition of BMCP.live. This time we will talk about tokenized securities with a focus on the Asian market. I will give you a little bit of an explanation up front. The whole call is structured like a fireside chat. The audience will have the possibility with the Q&A tool on the bottom of the screen to submit questions. We will answer some of the questions live because we have a secret person behind which will do that. But also at the end of the fireside chat, we will try to answer kind of those most important questions. What else will happen? We will have as well in between short questions which are related to the topics which we are talking. So it's like a pool function, so you can click and give answers if you feel so too. For those who don't know me, my name is Juergen Hoebarth. I'm into blockchain technology since more like, how to say that, 4 or 5 years. I'm also very interested what's going on in the space of tokenization. And I would like to pass over the words to Christian. He will give a short introduction from Black Manta's side.
Yeah, hello. Thank you, Juergen. Thanks to the panel for joining us. My name is Christian. I'm co-founder of Black Manta Capital Partners. And for several weeks now, we've been setting up and enabling this BMCP live chat on a variety of issues. And going forward towards summer, we will have more of these, at least a couple every month. And today, with Source Digital Assets joining us recently in a cooperation, and surely we have in the panel today. And in general, with our ambition to work closely with Asia, with the hubs in Singapore and Hong Kong, we thought, okay, we all move this panel to the morning and start early, so everyone in Asia can join on an afternoon. For introduction, I want to make one short statement on where we are in the space of tokenized securities, and I think we see 4 important elements. The first are basically the primary issuing platforms. The second element is custody. The third is all means of trading, peer-to-peer, secondary market and exchanges. And finally, the fourth element, the big question of liquidity. And I guess throughout this chat, we'll touch on all 4 of them. I'll start with us as primary issuer. We think when we look at the markets, the big issue why tokenized securities are not taking off at the moment is there isn't really a service provider at the start of the process. So in the end, it starts with primary issuance. And what's happening in the STO field is the companies, the startups, other entities like real estate trusts or whatever funds set up basically their own primary issuance platform. They buy the tokenization engine, buy KYC, AML, know your customer, and anti-money laundering application, bundle it all together, somehow create their own investment bank for one offering, onboard the investors for one offering, and then have a hard time in many jurisdictions to get through with it with the regulator. So our approach was being multi-STO platform. We run STOs, STO after STO. We are regulated as a financial services firm in Germany by BaFin and under supervision of BaFin and the German Central Bank, the Bundesbank. And this license we have within the European MiFID II regime. So basically in any European Union member state country, we can run a regulated compliant security token offering based on the respective capital market laws. And I think from our perspective, that was the first big point that was missing in the discussion. And don't want to be too long with the introduction. I'll come back later to the elements of custody, trading, and liquidity.
Okay, thank you very much, Christian, for the introduction. So everyone knows the first panelists. I will introduce you the other panelists as well shortly. There is Eddy Travia from Coinsilium. He is a person which is a very long time active in the crypto space, and he has a very deep knowledge, not only on technology, so also too on how things are done. Then we have Jean-Luc from Source Digital Assets. He is a lawyer by trade, as he called it, who was falling in love with crypto and security tokens, if I recall it correctly. Then we have Yai from Crossbridge. He is very experienced in managing assets, also to assets which are from traditional people, but he's also to a clientele which is people from the blockchain and crypto space. Then we have SJ from Octagon Strategy Limited and BC Group. He is a very experienced trader in equity sales, worked before for Morgan Stanley, and now he most likely falls as well in love with all things new. And then we have a very interesting person which has a deep knowledge in legal things, and his name is Padraig, and he's from the company Witt. I would like to start off the conversation with the following questions, which I would like to pass to Jean-Luc. So Jean-Luc, we are talking about security tokens. How do you see the market at the moment in Asia? Can you give us a little bit of a perspective? Because I think you're traveling a lot and have a very good overview.
Yeah, thank you very much. Hi, everyone. Our view on this topic is that it's obviously still very nascent. That's for sure. Okay, so let's just all admit that we are somehow pioneers on this topic, and this is actually what makes it extremely exciting. But we see more and more interest. Pretty much every day there is a big news coming to the market about a new fund, about a new asset being tokenized. Obviously, we think about real estate, but we are also involved in other projects, non-fungible tokens. In the art world, for example. I mean, we see a lot of very, very interesting things because everybody at least understand that first, this is an extremely interesting business model that is now available. It's becoming more and more mature, and everybody understand that it has a lot of potential. The four key elements that, in my opinion, drive the markets are obviously the fact that there is now those assets. Now we have enough research on them to be able to provide fundamental analysis, security, tradability, liquidity. All those topics now are being discussed very, very widely. It doesn't mean that there's no issues. Once again, regulatory, from a regulatory perspective, from a legal perspective, from a compliance perspective, it's still an ecosystem that is being built. But I believe our clients and prospects, which are usually family offices, high net worth individuals and institutional investors, now tend to consider this, security token as a very interesting asset class. And I would even say, I don't want to take too much time, but I would even say that now with the drop in crypto prices, they understand that, you know, the smartest will survive. So basically, if you want to get into anything related to crypto now, and obviously security tokens that are connected to that, it's the right time to do it now, because the fundamentals are solid.
Okay, thank you very much. That was a very good input. I would like to, you mentioned like we are all pioneers, and I would like to pass the word to SJ from Octagon Strategy Limited, because I think they have been pioneers in the crypto space, and I would like to get a little bit of an idea, how do they see the security token space and per se with the focus on Asia, because they are very strong in Asia.
Hey, thanks very much for the intro there, Juergen. So hi, for everybody that briefly, there was an introduction for me. So I come from the world of equities and have been with OSL for the past 3 years. And I think OSL is quite well positioned, at least in this part of the world, because it's most likely the case where we will, by the end of this year, be regulated and licensed in 2 of the biggest financial hubs of the financial realm. So Hong Kong, the public announcement was made. We did apply for the application back in November. Hopefully that'll be wrapped up quite soon. And obviously with the PSA, there's been hundreds of applicants, and we are one of them ourselves as well. But I think in terms of the STOs, I would like to perhaps take a contrarian view, because everybody on this panel is, I would say, has a propensity to be naturally bullish, naturally long, because that's why you're here. So there's always a selection bias when we have these sort of panels, and I've been thinking about these STOs. So generally speaking, if you don't think we're going to go back to the barter days where we were trading seashells and special precious metals, I think nobody really doubts that the future of assets of anything store of value will be digital. So that's the natural progression, being STOs. Everybody thinks has different views of how that actually materializes, but it's a democratization of capital raising, I would say, in slightly a more regulated version as opposed to the ICOs. But the question, I think, is where will the liquidity come from? Because I don't really see a complete overlap of the current crypto traders, be it retail or investors, or instos or high net worth, the sectors, being a complete overlap. So in other words, just because an asset that was previously not available for these one segment of investors is all of a sudden available because the notional tickets are smaller. There is actually a way to get to the assets. I think there was a comment about somebody having issues with acquiring Line, a Korean company's equity when it listed, because he just didn't know how to do it because it was in Korea and it's not exactly the most foreigner-friendly jurisdiction. So the obvious benefits are there, but I'm just curious to know how everybody feels about where the liquidity will come from. Will it come from the existing retail investors? Will it come from the institutional investors? Because quite honestly, those guys would have gotten the first look from these deals, and they would have had the trigger power to invest in them alone without having to securitize. So I'd love to hear people's views on where the liquidity will come from in their opinion for these STOs.
I think that's a good point to pass over to Yai, because we had yesterday a little bit of a preparation, and I think Yai is familiar with people which are in the crypto space and not in the crypto space. So could you give us your perspective on this?
Well, I think that much of the market that is seeking liquidity through the crypto market is people who actually do not have direct experience in it. So my experience is that clients that we deal with, the prospects that we're dealing with, are not blockchain lovers, right? So they're just looking at it as a new opportunity to tap a new market and tap a new venue. Although it's new, in many ways it does follow the old forms. So we're talking about, when you talk about securitization, we still have to adhere to jurisdictional issues with regulators and exchanges, broker-dealer licenses, et cetera, et cetera. So this is where it's starting to come together. But the real interest, as far as people who are looking for liquidity, are looking at a possibility of tapping new markets. So, for example, if I'm going out there trying to raise liquidity through a private offering, I would be confined to the people that are immediately around me. And if I hire somebody, the people immediately around them. So if we could actually have a platform where, for example, let's say you and I are sitting around, we're talking about a particular investment proposal, and let's say it's Brazilian real estate or something really silly, right? Then you go, okay, the guys thinks it's a good idea. You wouldn't mind betting on it, but you only want to bet $1,000 or $2,000, right? So in the way that you're talking about Line in Korea, let's talk about other things like owning a piece of a Rembrandt or a piece of real estate anywhere around the world. So in that way, it's access. And so then if we could do that, if we could bridge the two sides, we basically push out the big players that have actually been taking advantage of it and not been servicing the markets. And this is where we have all the disconnects in the market today. Banks are supposed to be taking care of all of these things, and they're not. And so this is where the opportunity is arising. because it's easy for a company like Apple to raise money. It's almost impossible in normal times for a normal company, a small SME to raise money. Now it's a little bit easier because we have COVID. So then some countries, some people are able to borrow from the government. So it takes an event like that in order for the government or for the big institutions to step in and provide liquidity. That doesn't really make much sense. So there is this growing trend for this, and I think that this is where the demand is coming from. However, I think that it is difficult to put into practice because of all the old school or the old guard regs and the new what technology can actually provide us today.
Okay, thank you very much. Very interesting insight, and I would like to pass the word to Eddy because I think he's also the pioneer in the space, and I think things like liquidity have been a problem in the beginning in the crypto space as well, and he lived through that. So, what's your opinion on the whole idea of security tokens and the problems which are there? Are they going away? Will things change?
Well, I mean, the first problem that security tokens will encounter, as we know, is regulation. I mean, that was already a problem back then in 2013, 14, with the first companies dealing with Bitcoin and cryptocurrencies. Obviously, for security tokens, there is a backdrop, because if you're talking about securities, there are already regulations all over the world. And as we know, for example, Germany is one that, Christian mentioned you were active in Germany. I mean, Germany is one of the countries that has adopted early on a security token regulatory framework that's quite clear, or at least they find a way to make it work with existing regulations. Now, there has been a consultation in Europe for crypto assets. The reports that have been written around this consultation and the studies done by the European Union, and a lot of emphasis has been put on, MLD5.
Is Eddy breaking up?
For me, yes.
Okay, it seems like Eddy was breaking up.
It's here on Eddy's end.
Sorry for that. It seems like his connection is not that good. Maybe I will pass, because everyone is talking about regulation. Maybe I would like to pass the question in terms of regulation towards Padraig, because he is a lawyer and I think he can give us a very good perspective on this.
Thank you, Juergen. It'd be great if you could narrow the question just a teensy-weensy bit. In terms of regulation, I think one of the, actually, just on the poll that popped up is how critical is regulation in respect of the security token infrastructure environment, and it is critical because it gives, for a start, the clues in the title. It is a security token, which means that whatever you do in terms of interacting with that, promoting it, selling it, trading in it, all of these activities are generally going to be regulated activities that you need licenses for. And this is, in many ways, a very good distinction and mark of quality in terms of the maturity of the security token environment, that those regulations are coming on stream and people are going through the process of getting themselves licensed and so forth. It was interesting to listen to SJ earlier on from OSL speaking about the process that they've gone. And if you look at people like OSL, like BC Group, people who've been here from the early days in terms of the crypto scene in Asia, and you can see that those who have approached the market with the right attitude from the outset, and OSL would certainly be within that group, they are now at a stage where they are capable of being licensed by fairly heavy-hitting regulators like the SFC in Hong Kong and the MAS in Singapore. Just in the course of this week, there was a Bitcoin tracker fund that got approved here in Hong Kong. And the licensing conditions apparently was more like a booklet rather than just the usual one page of conditions. You know that the new entrants to this sphere in mature markets like Hong Kong and Singapore are going to have quite a lot that they need to grapple with. But if they're able to grapple with that, and if they're able to embrace both the regulation and get the right relationship with the regulator, then that's a huge boon to what the security token environment needs to be. And we're well on. We're not at the destination of that, but we're well on the path to the destination for that.
So I would like to pass the word to Christian, because I think everyone is talking about regulation, and what we see at the moment on a global scale, that it's very hard because kind of, how to explain that, in each country it's a little bit different. So could you give us a little bit of a perspective, because everyone is saying for example, Black Manta has a license in Germany, but the reality is a license like this can be exported to other European countries. Would it make sense in the future to have basically something like this on a global scale? Christian, your audio is off.
Well, I'd say on a global scale, it's always difficult. So we are lucky to be in the European Union, and the European Union has some regimes in place, like the MiFID II regime, basically a directive that enables us, regulated in one country, in our case in Germany, offering our services all over Europe. I think something like that is hard to put in place on a global scale, but let's say going down the road, we'd expect if we show up, let's say in Singapore and Hong Kong and getting regulated there, having a track record being regulated like in a country like Germany, things might be easier to do a rollout. In terms of regulation, I'd like to make 2 points. And Eddy mentioned Germany. Yes, indeed, Germany was quite forward thinking. At least the regulator took an ad hoc approach and said, okay, we are going to enable some of that stuff. We are going to enable STOs, basically applying existing capital market laws in an analog way. And we don't wait for legislation to make that happen. We give like Manta a license without waiting for dedicated legislation for service providers in the field of tokenization. And there are a couple of others out there. I think this is very important to get a market in motion, because this hen-egg discussion, yeah, but it's not taking off because we don't have secondary markets. There is no liquidity. So if there isn't an offer on a primary market, there won't be liquidity towards that offer. If you don't have tokenized assets, there won't be a secondary market. And maybe one more thing, and Jean-Luc wants to take over. One more moment. I think we see a very important piece in that, in the 4 elements I mentioned in the beginning, in terms of custody. So yes, Germany and a couple of other countries regulated custody providers. And this is especially important for institutional accredited investors, bigger family offices and the like. So they won't store their tokenized assets in a MetaMask or whatever. So they will rely on a regulated service provider in the field of crypto custody. And once we have these regulated providers in the space, plus trading capabilities, technical trading capabilities on secondary markets, this will enable then the professional ones, the institutional ones, the accredited investors to bring liquidity to that field. So we did some work on our end on its primary issue, but there are several elements coming together to help this market to take off in the long run.
Mm-hmm. Jean-Luc, let's continue with Jean-Luc.
Yeah, I mean, I could not more.
I see you're sitting
I could not agree more with
your feet.
No, I could not agree more with Christian. I mean, honestly, my opinion is really that this liquidity never-ending question is irrelevant. I mean, seriously. When I speak to our clients and prospects, once again, family offices, ultra high net worth individuals. I mean, I can tell you, liquidity is is not the first question that comes in the discussion. It's not even the second. It's not even the third. And you know, I've been extremely interested with with the Aspen, Colorado STO example, and I actually ask questions about that to those guys, and basically when you ask them why did they decide to do such a thing, because obviously everybody knows that at this time, even now, there's no liquidity in the sense that you would expect it to have on a mature market. Mm-hmm. I mean, it's not about the liquidity. What it's about is about reducing the paperwork. It's about the advantage, the singular advantage of an STO versus a conventional REIT or a single asset REIT. It's about the stock exchange listing fee. It's about legal fees. It's about accounting fees. So basically, it's all about reducing fees and paperwork related to a real estate sale. Nobody expects this to be liquid. Nobody expects. I mean, once again, this particular population, this particular class of investor, those guys are not retail. They don't expect this to be liquid next year. They expect a great product to be part of their mid-long-term portfolio, and then they can play with it. They could use it as a collateral. I mean, they could play with it, but the first point is definitely not the liquidity, and also the fact that the market is much more mature now, with wallet, with custodians, with all those things. That this is what we need to talk about. Liquidity, once again, is definitely not the first point. When we get to the retail market, the retail level, yes, it will become obviously a key thing, but not now. That's my opinion. And as Christian perfectly said it, I mean, we have to start somewhere anyway. So yeah. I mean, we need to create a primary market. We need assets to tokenize.
Yeah.
And then the rest will follow, right?
Okay. No,
yes.
Anyone wants to comment on this?
Yeah, so I mean, maybe I can just jump in. So I think the last point you made there was pretty much spot on, Jean-Luc. I mean, it's pretty much private or public. So I can tell you, it's a completely different profile. Like, I mean, Securities has gone and securitized a lot of good things, but I think the objective of the issuer is it will be extremely different whether it's a private or a public issuance. So, for example, I can give another example in Korea where these laws, basically the inheritance tax in Korea is over 50%. So whatever you can do to avoid paying taxes just by passing on your wealth to your next generation, I mean, it's well sought after, as you can imagine. So when this ICO boom went crazy, some of these guys, they called themselves, I guess, consultants. What it was the father would issue an ICO. They don't really market it. It goes bankrupt. But guess what? The son raises the ICO and the father invests in it. And they invested $15-20 million. And on paper, they've transferred wealth. Taxes, they pay zero. I think that's one of the big reasons why they cracked down. That's a completely different story. But for those kind of situations and the ones that have been extremely successful in this part of the world, we've had, I don't know if you guys have heard of these guys called Liquify, but they've got some pretty tier 1 top shelf partners. And the deals that they put together are pretty amazing. So they have commodity mines in South America. They have stand-up property in the middle of London. They got some players in the entertainment industry in this part of the world as well. But all of those of them have been private launches. So it's been more to do with within internal transfers only. But I think when it comes to public offerings, if you think about it, like what is the incentive for, let's say, Sequoia or like one of the top tier VC or private equity funds to issue a security with one of their crown jewels? They might do it with some of the assets that they do not want on their balance sheets, and they can shill it to the retailer and say, hey, look, go get this, and they can just jump for joy because it'll be an asset that was owned by a tier 1 private equity fund, which previously they would not have had access to. But then you have to think about the actual quality of the asset per se. Would they, for example, release their crown jewels? I don't think so. And the only way for retail investors, or let's not even go to retail, let's call them accredited or professional investors, depending on what jurisdiction you are. These guys will, the only thing that they can actually provide in terms of enticement for the guys who have assets that can be securitized is liquidity. I don't really think there's anything else. I mean, this is assuming that the security, the trustworthiness, the counterparty risk, all this has been addressed. But the fundamental reason, I think, if you look at the successful markets, BitMEX, although OKX has taken over a few weeks ago, the fundamental reason that public exchange platforms succeed is liquidity. Like it's either liquidity or you provide a unique asset. And then we're talking about these guys who have listed everything under the sun. So I mean, when it comes to private issuances, I totally agree with you. Liquidity is the last thing on their minds. But when it comes to these public marketplaces, which I think everybody's trying to build, it has to be the most important thing.
Okay, Christian, you wanted to add something I was seeing?
Yeah, I think what's important to understand before we negotiate a couple of arguments is that STO is a much broader concept than, let's say, an IPO, for example. With an IPO, we have a very defined financial instrument. An STO can be a lot of things. First, it can be retail, private, or for professionals only. It can mean we structure equity, or we structure debt, or we structure participation rights. So the STO basically taps into existing capital market laws, is, as Padraig said, a completely regulated financial instrument, applies existing laws, and structures it according to the respective jurisdiction. Now, when we talk about what are the advantages for the investors, what are the advantages for the issuer, how does this all come together, it can mean a lot of different things. If you're, let's say, a Sequoia and you're structuring a part of your portfolio and in a securitized way, in a tokenized way. So for funds, that can mean, okay, you tokenize a whole fund and you're basically maybe even invest in tokenized projects. It can mean you tokenize a fund exit, because that's usually also a big issue for funds, basically to liquidate the respective round. You can do a lot of creative things there. Or you can have, let's say, where you have in Luxembourg or elsewhere, or Singapore, where you have different compartments. You have just one compartment tokenized and bringing in a suite of retail or other investors than you have by raising private equity or other venture capital. So I think that's the difficulty in the discussion is it is so broad, and you really have to break it down, and you have to make the use cases where it makes sense. And one last, just as an example, if you're today, if you have like 20K in your account, 20,000 euros, US dollars, or 30,000 Singapore dollars, where can you invest in real estate? You can basically buy into real estate fund, and that's it. With these kind of retail real estate STOs, you can go, okay, I like that apartment building in Berlin, I put 10K in there. I like that condo project in Hong Kong, I put 10K in there. And I like that hotel project in Singapore, I put 10K in there. That is not possible as of today. As a retail investor, you can't go into these investments in that way. You buy into a fund, you have kind of okay margins, and that's it. And there are many, many other examples to be executed by our industry. And then when all the four elements of primary issuers, custody providers regulated, secondary marketing and exchanges regulated, and the respective investors like family offices being enabled, then this show basically will take off, and then at that point there we have all reason to be bullish, but it's a long way to get there from our perspective.
Eddy, great to have you back, and maybe you can continue or have in the meantime an opinion on what we were discussing, and I hope the connection is working.
Yes, sorry about that. I mean, China and the weather is not good as well, so maybe that caused a little interruption. I mean, the topic I wanted to go into, which I guess hasn't been covered during that small interruption, would be, let's see how these security tokens are regarded by various stakeholders and of course by authorities as well in a post-COVID crisis world, because obviously we all know that if we look at 2008 and post-2008, I mean, regulation had to be relaxed a bit. Why? Because, you know, obviously investors needed to be brought back to the table. And I think it's always a good time for innovation to come in and bring interesting ideas and interesting concepts in the mix. So I don't know if there is that right now directly if STOs are much cheaper or not than IPOs. It's possible for some assets, like Jean-Luc was saying, maybe real estate, etc. But I think in a post-COVID crisis, there will be the need for a lot of businesses to be refinanced. There will be the need for a lot of entrepreneurs to be financed, because we have seen VCs stopping to invest. I mean, not all of them, of course, but overall, the numbers that we start seeing are show that there is an interruption of VC funding. So usually when VC funding goes down, people turn to retail investors. Of course, they can also turn to family offices and high net worth. But I think there could be a regulation relaxation to allow for a better and more conducive environment for security tokens, just because it's one of the new ways to raise funding.
Yeah, I would like to ask you questions, because I think you're very long in the financial industry, and I'm assuming you have a good perspective. There's a product in Asia which is very popular, which are basically real estate investment trusts. Do you see, and what we know, like for retail investor, you know, there's a certain barrier to enter a real estate investment trust. Do you see a chance or an opportunity that real estate investment trusts would like to tap into more general investors which are doing small tickets, and could they do this through tokenization?
So real estate investment trusts, REITs as we call them in Singapore, are in fact very popular. In fact, the Singapore Stock Exchange is this is one of their rare jewels. So people come to the Singapore market in order to buy this. So it's popular because it's considered safe. The real estate market here in Singapore is quite stable. It has been stable in the past. There's a lot of adoption by the government, and it kicks out a yield. So in good times, you can buy it and you get a steady yield, and it gets capital gains as well. The benefit of buying a REIT as opposed to real estate is that typically people are more comfortable in leveraging up on hard assets. So when you buy your own house, you're willing to put down 20% and lever up 80% in which to buy it. Very few people are actually willing to do that on REITs. That's just a normal investment strategy. So REITs are important, but I think that it is considered a safe instrument. And because of that, we come back to the regulatory space. So because it has all these regulatory framework around it, I mean, let's face it, regulations are out there in order to protect investors, right? I mean, that's why it exists. So it's when it gets to be too much and overly onerous and it prevents people from actually taking advantage, this is where it's a problem. But where do you draw that line? At the end of the day, we are trying to protect investors. So I think that there is a really strong need for that. I think that if we could tokenize smaller assets, that would be great. But the problem is, you know, who's going to do the due diligence and the wrapping of the project, and you know, taking care of things like insurance and ownership, etc. And I think that these are key. This is a key thing. So I mean, this is part of what technology is supposed to solve, is make this all a little bit more efficient. But we cannot forget that these regs are there for a reason. So the short answer is yes. I think that it's important.
So in your opinion, basically technology helps, but still if you tokenize something, there's a lot of things to do which you would anyway need to do, like traditional, as you said, making secure, that's not, how to say that, bad investment and stuff like this. Because everyone is talking regulation, I would like pass back to Padraig, because I think he's the most experienced person in that. How do you see it? Like your company is it acting like across Asia, or is it like, assuming like, for example, you do something in Singapore, then how would it be able to offer something like a tokenized security then as well in Hong Kong, in Korea? Is it too complicated at the moment to do this, or would you think there's coming something where it's saying, okay, if it's under regulation in Hong Kong, then also to Singapore accepts it and other countries will accept it?
Well, I think what you have to do is you have to break up what's happening in a particular offering or in the trading aspects of it. So if you look at it in terms of where a project is coming to the market in terms of people promoting it, people on the ground, well, those people on the ground will be physically in a jurisdiction and would need to be licensed and regulated for that marketing and promotion activity in that jurisdiction. Your typical kind of dealer broker marketing licenses related with it. Then it would need to be listed on an ATS, an automated trading service, which again is a particular type of platform that would need a license in whatever jurisdiction that particular platform operates. And then if you are offering that particular security token into a variety of different locations, you'd need to get comfortable with the rules and regs in respect of securities offerings to people in those jurisdictions, you know, be they retail, professional, and so forth. And it can get pretty technical and pretty complicated quite easily. But if I could also circle back and comment a bit on the part about you know, the regulation of REITs compared to tokenized real estate. And one of the things that I've been struggling with in terms of understanding how a regulatory authority would view you know, tokenized property offerings. If you look at, say, Hong Kong and Singapore is the same. What the regulators effectively said is, if you're going to offer a security interest or a security in respect of a property portfolio, and you're going to do that on a retail basis to everyone, then you need to do it in a particular way with, you know, requirements around trustees and what level of leverage you have and all the various other bells and whistles that go with a REIT. And that needs to be anyone who's involved in managing those that particular REIT needs to be hold a particular license to do so. So it's very much a heavily regulated type of investment offering. If you look at tokenized property, it's kind of effectively the same, maybe just on a you know, a smaller scale. So what I would be surprised is if a regulator looking at an offering of a tokenized piece of property why would they view that in a lighter touch regulatory approach compared to a REIT? That's to me one of the open questions. I'm not saying anyone necessarily has the answer right now, but I think that is one of the kind of elephants in the room in relation to regulation vis-a-vis tokenized property.
So basically, why would they say, okay, in one way, if you do it like this way, it's very strict, but if you do exactly the same thing in another way, it's less strict, and that would be contrary, as a contrariety between what is happening and what would be going on.
Yes,
if I could just
particularly if a regulator takes a view that they are there as the, you know, the protector of the public and protector of the retail. If you move all of that solely to a professional investor level, then, you know, the issues might be slightly different. But then you're actually taking away from some of the value of trying to do something as a tokenized offering in the first place.
Any comments from anyone on this?
Yeah. So I was saying for real estate, the regulatory framework isn't exactly uniform across the board. So for example, REITs are highly regulated because they're publicly listed. Real estate funds, for example, are not regulated in the same manner. So there is a lot of leeway. It just really depends on who's the target audience. So governments will try to defend the retail investor, But however, there are ways to get around that. I think that the most important thing is about the provenance, the provenance of the property itself. So is a title deed in fact owned by that entity? Is a title actually in the hands of a trustee? Those are the things that I would say are the bare minimum. But a REIT offering is significantly more than that. So I don't think that we need to get to that bar, but I do think that we need to get to a bar.
That's a good point. I would like to continue because I have seen there are some questions. If anyone has to add something at the moment, feel free. And I would like to start with the first question. And there's an interesting point, because when we talk about Asia, and I think everyone is talking now about Singapore, Hong Kong, Korea, Japan, countries like this, but has anyone an idea or an insight what the situation is, for example, at the moment in China? Because we have seen in the recent days, China is going to issue a digital currency. Do we expect there's something happening in tokenization as well? Eddy, you would like to have an opinion on this, because I think you're based in China.
Yeah, sure. I mean, well, obviously, you know, I think central bank digital currencies can help overall in terms of awareness, at least of cryptocurrencies. But obviously, we all know in the industry that it doesn't necessarily it's not necessarily a crypto asset. It may or may not be on a blockchain. I mean, there's going to be a lot of differences between central bank digital currencies and what we know as cryptocurrencies. So that's the first thing. Blockchain itself as a technology has already been included in many Chinese planning and many Chinese, at least in the discourse. And also we know that the president of the countries has even mentioned blockchain, I believe last year at some point. So there has been some hype around the support, official support of blockchain as a technology. Now, I wouldn't say that it's going to necessarily have an influence on tokenization just yet, because, you know, that's China has been very wary about, for example, P2P lending. I mean, the P2P lending environment has been difficult in China, a lot of failures. So anything that is touching retail investors is always tricky in China, because when it's popular, it becomes maybe too big for the authorities to handle it. And obviously that was the case with ICOs, as we saw at the end of the summer 2017, China put a ban on ICOs. So I would say tokenization will take some time, but of course it's a good first step to see blockchain being seen as under a positive light in this country.
Okay. And another question is basically, assumingly, I would like to do a security token offering at the moment in Asia. So what are the hotspots where we can do it, and why, for example, someone would prefer Singapore, Hong Kong, or some other jurisdiction? Anyone wants to take that question? Not really.
I could speak in general terms about it. I think, you know, whether you go to Singapore, Hong Kong, Korea, or any other location, it's you'd look at exactly the same factors as you would for any kind of investment offering. So it's not, you know, for instance, regulation might be one aspect of that, but it's only one aspect of it. You would also be looking at things like, where do you expect where are the relationships of the people who are going to support you in that offering itself? Where are the target investors? Where is the market going to be that's going to have the you know, the liquidity in terms of the trading? So where are the assets that are being tokenized, or the particular instruments that are being tokenized? So, and you look at the whole range of issues. So there isn't you know, there isn't a simple go here or go there. It's going to depend upon the specific investment offering. There will be some for where, you know, if you're to speak in broad brushstrokes, I think Hong Kong is trying to position itself more towards the higher end or the institutional end of that market, and Singapore has a more open view. So not that it's not looking towards the institutional end, but I think it may be a more friendly place for particular projects to bring their projects forward than maybe Hong Kong. But that's all broad generalizations. Each offering is different, and you would even ask within that, it need not necessarily be something that is Asian. It could be something that's European. It could be something that is focus more towards North America. It depends on the particular assets and the particular project that's coming to market.
So basically, you're saying so setting up the company is not basically the biggest issue. The issue is then in which markets do I want to sell. I think that's what's causing at the moment the issue. Because if I'm setting up in Singapore, then I'm definitely under Singaporean regulation. But if I want to sell in Hong Kong, I need to basically have broker-dealer license there and stuff like this. I think this is a little bit the challenge which we are having nowadays. To be honest, does everyone see this like very similar, or are there other contrary options? And what is also too very interesting for me is the questions of, I would like to pass the questions on, what is going on in countries like Malaysia, Indonesia, Philippines? Because we're talking here about financial hubs like Hong Kong, Singapore, where it's an established, how to say that, industry, but is it a chance like tokenization for emerging markets, that they get some piece of the cake of the financial market?
I can offer my opinion if you like.
Yes.
Well, my opinion is that I mean, crypto blockchain is not really it's not really jurisdiction based. So I mean, when we talk about wallets, we talk about blockchain. It doesn't belong in any one country. It doesn't belong in any one place. And I think that actually that is the main way that we should actually be doing this as well. So whether we do securities or we do ICOs, etc., I think that the way to look at it is to be jurisdiction agnostic, or jurisdiction, you have to be in multiple jurisdictions. So in the old, when ICOs were coming out of Korea, for example, and I was always saying that maybe what you should do is you put a sales office in Singapore, you put your tech base out of Korea, you have your legal base out of the Caymans. That is a better way of doing it. Although Singapore, as you mentioned, is good, and Hong Kong is good as well, there are weaknesses on both sides, and they don't share the same weaknesses. So in Singapore, it's very forward-thinking in terms of the technology and blockchain, but the banks haven't followed suit yet. So if you are involved in that, it's difficult to open an account. So what you need to do is you need to mix it up, I believe. And so I think this is the best way of doing it. Don't just stay in one place, but look at having a setup in multiple jurisdictions, and you can fall back on many different places to do that. And once you do that, and you have a foothold in a strong jurisdiction, like what Black Manta is doing in Europe, I think that's a good idea. You have an EU base, and then with that base, then you can actually have the equivalent of an ADR into another market where you perhaps wouldn't just trust that jurisdiction, because Philippines and Malaysia are legitimate countries, but not everybody's familiar with that. So if you do a listing over there in a local exchange, do you really know everything is safe? Well, you would if the master token is sitting in a better jurisdiction, right?
Okay. Anyone wants to add something to this?
I just want to add that what I personally really enjoyed in this industry right now, both in Hong Kong and Singapore, but also even in places like Malaysia, is the fact that regulators, contrary to, my experience in Europe before that, they are, I personally find them very, very cooperative. I know usually a lot of people usually putting cooperative next to regulator is usually, it's not a good match, because you would not expect regulators to be willing to help you in your effort to build something compliant. I'm French, for example, and if you go to the French regulator and you knock on the door, of course, it doesn't work that way. But in Hong Kong, for example, you can actually literally ask, SFC for a meeting, and they will help you. They will assist you in order to make sure. Obviously, their goal is to protect investors and to make sure that what you do is extremely compliant. But they will also help you because they are very close. They understand the fintech and the tech ecosystem, and they want to be part of it. So that this is something that I would say a few jurisdictions in Asia have, that makes them extremely interesting compared to the rest of the world. I don't have any experience in Germany, for example. Maybe Christian can have a few words on that. How difficult it was to secure your license with the German regulator, with BaFin, for example. That would be interesting to know.
Well, I can comment shortly on BaFin. I can take it a little bit broader because by the time we've talked to a half a dozen of regulators all over Europe. So the discussion with BaFin was, of course, not easy and straightforward. It took us basically 9 months to convince the regulator, and huge data rooms and showing up in person in Frankfurt and basically laying down our plan. But in general, I think the German legislator and the German federal government are very forward thinking in terms of, okay, we want to regulate that, we want to move forward. We see a value in blockchain, in the financial markets in general, and in tokenization in specific. So we will see dedicated legislation in Germany towards tokenizing assets, as we've seen as of January 1st regarding crypto custody. We also talked, for example, to the Irish Central Bank, and the guys there were very interesting what's happening, but it felt like they still have other issues to deal with, and it's not something high on the agenda. So what we are doing is we are running now real estate STO in Berlin, and we are planning half a dozen other ones in different jurisdictions. So we are establishing one-on-one relationships with the FMA in Vienna, the Austrian regulator, with the regulator in Luxembourg, with the regulator in Liechtenstein, in Dublin, wherever, where we see interesting assets to be tokenized and issuers approaching us all over the board. And that's basically developing that on a step-by-step basis, finding the use cases, making the case. As maybe one more, if I'm allowed, one more comment. We talked about, okay, is it not as complicated, for example, talking about real estate trusts, is it not as complicated as a normal real estate trust? And I think, yes, in the beginning, as of today, it might be. That's, for example, why with our real estate project in Berlin, we're just offering participation rights, and it doesn't go to a trustee and then going down to the land registry and everything. But maybe as a final statement from my side, blockchain will be transformed a lot more than just how we transfer assets. So blockchain will come into the play in the long run, let's say over the course of this decade, when we talk about, for example, the land registry, when we talk about company registries. Now, in a economy and society in 5 to 10 years from now, where we manage identities of persons, of entities, of land and real estate on blockchain, this will transform then the current trading and transferring of assets in a completely different way. And the gains in terms of efficiency and transferability we have now today will in 3, 5, 8 years from now, depending on the countries and jurisdictions moving forward, completely different. So that's basically my almost like already a final statement.
Yeah, it should be a final statement. And
but basically, so I think there is a lot to be positive about in the long run. And at the moment, everyone is getting lost in the details of finding a way in the current markets and jurisdictions. But it also, as a player in the market, we also take a very long-term perspective where this can go as a market, and what are the different elements that have to come together to make this.
Yeah, I think you described it very well. We have seen that in the blockchain space, and I know, like back in 2014, opening an exchange was risky, or opening Bitcoin ATMs. Now it's basically you can do it, and there's no problem. I would like to have a quick roundup for all the people. So maybe every one of the panelists could give like a very short statement how they see the future for security tokens and tokenized assets in Asia. And let me start with Jean-Luc, and keep it please short because we are already running over time.
Like I can't do anything short. Seriously?
No. It's just like, you know.
I mean, I'm extremely bullish. I mean, I believe once again, we all have been in this industry for a few years now. In the crypto space, I would say 1 month or 1 year is probably, I don't know, maybe 5 years in any other industry. So I believe all the different bricks that constitute the ecosystem are now in place. And now it's becoming, now is the time where I believe we will see very, very interesting projects. I mean, we do have, I mean, the assets are definitely coming. I was reading an article about T0, and they were saying basically that this year only they expect about $500 million assets to arrive on the market, and then wallets out here are here, custodians, broker dealers. I mean, the entire value chain is there. Obviously, the most important part is investors are definitely curious. Obviously, the amount of investment are still relatively small, but it's I believe it's there's a dynamic, and the dynamic is not going to slow down, COVID or not COVID, and it's here to stay. It's here to stay.
Perfect. Thank you very much. I would like to pass. Done. Perfect. I would like to pass on the word to Padraig. What's his perspective, and to sum it up?
Well, I think I guess from my particular perspective in this universe, the one thing that I am heartened by is the degree of regulatory engagement that you presently see across Asia. I think every regulator has this on their radar and is introducing things, and more than just introducing regulations, is actively engaging to get people licensed and on a proper footing to be able to move forward. So we've seen that in Hong Kong with OSL, with Kinetic, with Diginex, with all of the kind of traditional big players. They all have, or will soon have, licensed entities able to provide that infrastructure for this to move forward in the way we all hope that it will do, which means like a year, in the crypto world, you always say, oh, give it a year and it will be massive. But I actually think now you give it a year, it will be massive.
That's great. Okay. Yeah, your statement?
Well, actually, I would say, if anything, it's a little bit opposite to that. I'd say because of COVID, I think that it's put a huge stop on everything. I agree that the regulatory space has improved dramatically over the last 6 months to 9 months. However, I don't think that the demand is there because everybody's worried about staying at home. The fact that we're actually doing this on Zoom, and there's discussions about transmission, et cetera, et cetera. Plus the fact that oil is moving, equity markets are moving. There isn't a general consensus in terms of where the market's going to bottom out, if it's bottomed out, or maybe it has bottomed out. So I think that has to be dealt with. However, stick with it. It's just a matter of patience. I think we all understand the direction where we're going, so we know the direction. It was just, are we going to get there at 50 miles an hour or 300 miles per hour? It's even more frustrating because we're in the blockchain space, and blockchain space, as Jean-Luc mentioned, time happens on a different time scale entirely. 5 years is 15 years in the regular world, so it feels like an eternity. But I think that it's just about hanging in there and keeping the faith.
Okay, thank you very much. And Eddy?
Yeah, sure. So I would say that, to come back quickly on the jurisdiction, because I saw there are many questions around where to do STOs. I mean, apart from the UK, where our shares are traded on Equity Stock Exchange, the two jurisdictions we look at and we work with are Gibraltar and Singapore. And I think when Padraig was making a good point around what to look at in jurisdictions, one of the things we look at is the experience of the law firms there and the experience of the lawyers. And some jurisdictions have had a lot of ICOs. Some, like Gibraltar, have had the DLT license for a few years now. And I think it's very important to work with legal professionals who have dealt with tokens or cryptos before, and it helps a lot in the process. And that's why we're looking at Singapore and Gibraltar. The other reasons we're looking at these jurisdictions and we're working with them is because they tend to have more principle-based regulation than rule-based regulation. And I think when, or at least they're looking at the crypto assets under a more of a principle-based regulation framework, and we like that as well. So just to, and in terms of the future, still optimistic about what's going to happen in this space, and still very much involved.
Okay. SJ from Octagon Strategy had to hard drop, so I say thank you to him personally later on. And to all the panelists, thank you very much for having time. And to the participants, we will send out an email, which will include as well the link of this whole thing recorded. And it will be put as well on the Black Manta YouTube channel. Christian, do you want to give the final goodbye?
Yes, well, actually I wanted to comment on Eddy's last comment that sometimes the ICO lawyers are not the best ones. So get an experienced capital market lawyer and explain him what you want to do in the tokenized world. That's how we approached our license, because the ICO lawyers sometimes don't get the prospectus done for the securities offering. But as a joke, not
you know
it. And thank you so much. We are enjoying these panels a lot. It's great to get the input. It's great to have all the audience in. Write us an email, comment on the video. We will try to get back to you if we couldn't answer your questions. Guys, thank you so much to Hong Kong, Singapore, and elsewhere. And yeah, see you soon.
I think we could run another hour, but everyone has other appointments as well. So thank you very much and goodbye.
Have a great day. Have a nice evening. Bye.
Bye-bye.
Bye-bye.
Bye-bye.